Before we get started, I'd like to take a moment to recognize our partners, the City of Ottawa and the Association of Consulting Engineering Companies of Ontario Ottawa Chapter, and thank them for their contribution to this event. We'd also like to thank our sponsors, our gold sponsor, Forterra, bronze sponsor, Aecon Construction Ontario East Limited, and our corporate sponsors, JD Brule and Clean Water Works, that support all of our events. We'll now hear from Bernie Robertson, Derrick Roberts, Jon Jones, and Steve Montcalm, who will provide information from the insurance industry on the state of the industry, the value of risk management, and an update on transportation safety and compliance. Bernie has over 30 years of experience and brings a vast range of knowledge to his role as branch manager at Gifford Carr. Kicking off his broker career in 1994, Bernie concentrated on risk management and insurance placement for the mining industry, and he hasn't looked back since. Over the course of his career, Bernie specialized in the energy and mining sectors, giving him a uniquely in-depth understanding of this niche customer profile. In his capacity as branch manager, Bernie is responsible for developing industry-specific programs for underserved market segments, as well as driving new sales and mentoring our next generation of insurance professionals. Bernie strives to provide timely and customized risk management and insurance solutions to our business clients. He's passionate about continued learning and can effectively translate complex insurance concepts into relatable examples. Bernie thrives on building strong relationships and thoroughly enjoys the advisory role he plays for both clients and colleagues. Derrick Roberts is a middle market underwriting manager in the Greater Ontario region for Aviva Canada. Derrick is a well-known insurance professional serving commercial brokers in Ontario. Derrick leads a team of underwriters at Aviva, managing a portfolio of broker partners. He is a liaison for the Aviva Claims Department and is actively involved in commercial product training and pricing development nationally, with a focus on construction and casualty insurance. He holds his Chartered Insurance Professional designation from the Insurance Institute of Canada and a Business of Insurance diploma from Algonquin College. Derrick has had a wide variety of underwriting, advisory, and leadership experience through his 25 years in the industry. He's held volunteer roles with the Insurance Institute of Canada as a chapter counselor and a career ambassador promoting careers in the insurance industry. Derrick has a passion for delivering industry-leading education information sessions. Jon Jones is a vice president, a business development broker markets with Sedgwick, Canada. Jon began his career in 1984 as a casualty adjuster with a large national independent adjusting firm, then progressed into the roles of branch manager, Northern Ontario regional manager, and business development manager. From those early roles, Jon developed into a seasoned sales and marketing executive, leader, and innovator with over 35 years of insurance experience and integrity. His specialties include personal and commercial insurance, transportation, and third-party administration. Additionally, with autonomous responsibility for spearheading market and product development and product management. This included the establishment and implementation of strategic partnerships with international TPAs, MGAs, cover holders, the London marketplace, and Aboriginal and broker communities. His wealth of knowledge and experience serves him and his clients well in his role at Sedgwick. Steve Montcalm brings over 20 years of experience to his position as vice president at Gifford Carr. Steve is results-oriented and completely dedicated to delivering the best possible solutions to his clients. In addition to working closely with the sales team, Steve also provides risk management solutions and conducts CVOR reviews with both clients and the commercial insurance team. His approachable nature puts clients at ease, and when he gets referral business, it's the best compliment he could ask for. When Steve has spare time on his hands, you might find him at the cottage with family and friends or hitting the road on his Harley Davidson. Since 2014, Steve has participated in the annual Ride for Dad, as well as many other charitable motorcycle events throughout Ontario. So thank you, and please go ahead.
Well, thank you for that long-winded invite, or introduction, Catherine. I guess sometimes we tend to have see these introductions as taking too much time. So again, thank you for that introduction for the team. I'm going to shut my camera off so that we don't have any video issues, but I will break into the conversation From my perspective, I'm going to be looking at the overall the insurance as a whole, trying to give some background to where we are currently, what the outlook is for 2022, with a little bit of an emphasis on the health and safety, which is an aspect that this session is about for the safety people and the owners that are in this chat. So let's get right into it. So I don't want to take up too much time because I think Steve and John have a little bit more focus. So let's get right into it. So purely from a global perspective, if you want to move to the next slide, Catherine.
Is everyone able to view the presentation just before I move forward?
I can see the presentation, Kathleen. Right now I see the slide that says the agenda with the 4 pictures.
Perfect, thank you.
Okay, Kathleen, can we move to the next slide, please? Perfect. So once again, I'm giving this slant purely from the broker's perspective. I think Derrick's going to lead into the insurer side of the equation, and then we're going to have John speak to the claims management TPA process and potentially your how to mitigate losses. And then we're going to have Steve speak directly to CVOR compliance, some of the other aspects of that, what the underwriters are looking for. So we're just trying to be overarching, but I'm going to try to give a little bit of a state of the industry at this current time. So I think we want to breach right away is that when we're talking about insurance, I mean, this is not something that's sexy. A lot of people aren't really all that enamored with it, but it's a necessary evil in our industry. Because in a lot of cases, you as business owners and as health and safety people have a responsibility to do your jobs well, to do it with reasonable due diligence, as mentioned in your previous presentation, and that a lot of the underwriting decisions that are made in your industry, you have to remember they're made by the insurance company, but they're not necessarily domiciled in Canada. So a lot of these decisions are made overseas by the parent companies. For example, in Canada, they're roughly 50% of the accounts would be American or European insurers. So that always has a bearing when you're talking about heavy construction and other areas as well.
So I guess that really didn't get us much, but it ends in 2022, so they'll be back at it shortly.
We hope so. And when we look at classes of business, for example, in Canada,
that'd be better than nothing.
From
with the way things are going up,
class underwriting. So again, let's go back to when we're talking about insurance, is that certain classes of business have certain higher risk profiles. Obviously, heavy construction has a lot more of a higher profile. Once again, your signage is on the street. People are seeing your name recognition. They're seeing your company vehicles with the name on it. So not only are you exposed from your actual work, but you also have an exposure with respect to your signage with your company vehicles and everything else. So we're going to get more into that as the presentation goes on. But here's some of the things that are affecting Dale, especially that part of it, is that decisions are made offshore globally for a lot of these big, large insurers. Natural disasters, as you know, have been a significant trend over the last 10, 15 years, driven by climate change, driven by other things. Litigation trends, I mean, right now, I mean, we didn't have class actions in 2006. So starting in 2006 forward, the government decided to enact change to the legal system, and now you don't necessarily need money to be able to sue someone. So once again, the claims inflation alone on litigation costs annually is 9%. So if that's the state, we're seeing at 9% being added on per year, then okay, what does that mean to my insurance rates? So we'll talk about that more later as we wrap up. COVID-19 hasn't helped, as everybody knows. Economics, the insurance industry, as well as many other industries, rely on investment income in some form to be able to sustain their business. Insurance companies, while they collect your premium, only get to invest 1/12 of it the first month. The rest of it has to be kept in cash or liquid assets that can be converted in the case you cancel your policy. So again, low investment returns don't give the insurance company a lot of opportunity to make investment returns. Scrutiny of information right now, overall in the industry, we're being application to death because everybody wants to get a good handle on the risk. And Derrick's going to speak more to that. But what we're seeing from a broker's perspective is that the companies are inundating us with paperwork to substantiate the risk for us to go back to you as the owners and gather this information to correlate it against historical information they already have. So they're scrutinizing applications, they're scrutinizing your business a lot more than they used to. Cyber. I haven't heard a business owner talk about cyber risk and how that has an effect on their potential of their business. I mean, there's been ransomware attempts on quite a few large and small scale companies, and it's low-hanging fruit now for these cyber criminals to come after your business, to impact your systems, and to ransom you for $50,000 to $300,000 to retain your information again. So again, it's something you need to talk to your risk manager about. So the big question for me from the global outlook perspective is, as a business owner, I mean, if anybody wants to chime in this, go ahead, is what keeps you up at night? Anybody want to chime in on that? Like, what's keeping you up at night as a business owner? Crickets, okay. So we'll move on to the next point. When we talk about capacity in the insurance marketplace, the last 4 years we've been in what's called a hard market cycle. In my last 33 years, I've seen 3 of them, where low investment returns, an historic event, natural disasters, everything kind of culminates into one area, and all of a sudden we end up having a market crunch where the insurers lose capacity, don't have the authority to be able to put their capacity to insurance, and therefore the rates start climbing. As we've seen over the last couple of years, there's been rate increases substantially on a lot of accounts, and Dale's already chimed in on that. Recent changes, the auto book of business in Ontario has gotten better because a lot of people aren't driving, because again, we're locked down, so there's not a lot of people on the road, so the frequency of losses in Ontario automobile has actually dropped. So the companies are now starting to maintain a little bit more of a profitability perspective. And again, Derrick will speak specifically to Aviva's results. From a heavy construction perspective, overall capacity has been muted a bit because again, we're not building there's not a lot of frame construction in the heavy contracting space. Frame construction seems to be still a bit of a sticking point and still difficult to obtain rate. But we see the heavy construction rates overall in 2022 stabilizing. So that's good news for everybody on the call. What I do want to reiterate is that there are still certain classes of business, for example, property, that is still difficult to place. For example, there was an account where there was, I see there's a note here, no need to interrupt the presentation. Okay. There's a note with respect to the one account that I worked on where their property variable description limit was $60 million, spread out various locations. Their total statement of values for all their locations combined was $168 million, but their limit loss was $60 million. Unfortunately, what happened was that the incumbent carrier that had the business for 10 years and paid out no losses just exited that class of business. The premium went from $100,000 annually to $1.1 million annually for a $48 million limit. So there are capacity issues in the marketplace based on certain age and building criteria. So just be aware of that. Next, contract surety. I mean, I don't have to tell the business owners in the room about surety and how difficult it is given supply chain issues. Financial reporting guidelines have changed, availability and capacity for any new surety that's required. The CCDC changes to the wording that happened in 2021, which are more of a clarification than anything else, but there's still ongoing changes that are occurring through all those wordings. So again, from a surety perspective, contract surety, with supply chain issues especially, it's been very difficult for you as contractors I wouldn't want to be an estimator in your company. How do you estimate when you have supply chain issues? when you don't know when your materials are going to arrive on site, when you have issues regarding skilled labor. And I mean, we're going to address that shortly. So moving on to the next section is labor. I mean, in the mining space, which is my specialty, they're projecting a $200,000 skilled labor shortfall by the end of 2022. There are mines that are currently have to shut down or go down to one shift because they don't have enough employees, irregardless of COVID considerations. So there's a gap in skilled labor in all areas, and there's a gap in skilled labor even in the insurance industry as well. With a lot of the boomers retiring, there seems to be a gap in between that skill set as well as the people wanting to come into the industry. So what does that mean for employers if there's, from a labor perspective? Well, that leads into my next section about medical aids, LTIs, and people that are in the safety space in this call will understand what those terms mean. I sit on the Canadian Diamond Drilling Association as the finance chair, but I'm also involved in their excellence, their program called DEC, which is Drilling Excellence Certification Process, which is basically a watered down ISO 9001. So what that does is that states that they will try to be, from a management perspective and a safety perspective, best in class. But what happens when we start bringing in unskilled labor into our workplaces and our work environment is that we start having more injuries, we start having more lost time injuries, more medical aids, because untrained people are doing work that they're not trained to do, or if they are trained to do it, because of their inexperience, will try to seek shortcuts. So that speaks back to the health and safety people on this call, is you have to be very cognizant of the fact that we have a lot of new entrants into it, people that we're trying to train up, but what is the backstory, or what's the issues going to be down the road with those people that are not working out, or not accepting the training, or are treating it as just interfering with their day and they need to get things done so they can collect their paycheck. Well, once again, when the frequency of injuries start climbing and it's a repetitive injury or some other type of injury and it starts affecting your WSIB premiums, then that's when it kind of hits the radar for the health and safety people. So as mentioned in your prior presentation, the safety meetings, the tailgate meetings every morning before the shift starts are paramount, and it's very important that gets done. So moving on to the next point, once again, I would assume that everybody on this call from a health and safety perspective, is there somebody else chiming in? Okay. WSIB clearance certificates and statistics, obviously from an occupational health and safety perspective, it's important that these are being sought and the statistics are being relayed properly. Unskilled labor, once again, frequency and severity are becoming issues in the industry, and not just in the heavy construction, but also in other sectors as well because of unskilled labor. COVID protocols being maintained at job sites. Your training regime is going to be under the microscope if your Ministry of Labor decides to take a look at your staffing and your fall arrest training and everything else. So once again, documentation to support your training methods is important. Are you maxing out your occupational health and safety training credits with WSIB to get the best possible rates you can for your staff? Because once again, you're all class 1 employees. They're all required to carry workman's compensation. Auditor inspection. I mean, are you being audited more frequently or less frequently given COVID protocols? And once again, TSSA seems to be relatively busy with their inspection criteria. Is the Ministry of Labor giving your association a heads up as to what they're seeking and what type of surveys they're going to be looking for in 2022? And just the last thing before I wrap up is that Steve's going to speak specifically to automobile insurance. He's going to speak to how to protect yourselves, how to view your company through the lens of inspection and criteria and drivers. But the one thing I wanted to mention is that there are systems available for you. We had one company that I dealt with that had 120 light private passenger pickups that were running all across Canada. And what was happening is they were finding their frequency of automobile accidents was getting high, and they wanted to know why. And it all boiled back down to was that the use of personal devices while these inattentive driving. So what they did was they installed on each of their auto policies, they installed a cell defeat system. What it did was that the cell phone functionality, except for Bluetooth for sending and receiving phone calls, was disabled until the vehicle was at a stop, and 3 minutes later, your functionality of your cell phone would turn back on again. Their frequency of auto accidents dropped 30% the first year. So just, if this is something that you think that would be, by all means, reach out to me and I can give you those details. And I can also give you a testimonial from that client as to what the benefits were to them. So again, from my perspective as a broker and what I'm seeing in the industry, this is kind of an overview, and this is kind of a setup for what you're going to hear from Derrick, as well as what you'll hear also from Jon and Steve as we look at other facets of your total insurance risk management program. Thank you.
Great, thanks, Bernie. And thanks, Kathleen. So yeah, I just want to say a big thank you to the Gifford Carr group, as well as the NCHC. I just have a few sort of primary highlights I wanted to share with everyone. And just about 3 or 4 minutes, and any questions I'm happy to answer. So again, I work with Aviva Canada, one of the largest insurers in Canada. So a little bit of just sort of the simplicity or the basics of my industry, the property casualty industry, which includes both personal and commercial insurance. It goes through, and what was spoken to by Bernie is soft and hard market cycles. The industry is been better part of about 3, arguably 4 years in the hard market cycle. In a hard market cycle, what we see is capacity. Again, as Bernie spoke to, capacity is difficult. It's not as available as it is in a more attractive market cycle. Rates are generally firm. Pricing is going up on renewals, and underwriting conditions can be challenging. As Bernie said, we have a tendency from the underwriting community to just sort of overdo it with applications at different times. Then in contrast, we have what we call a soft market cycle. So a soft market cycle will have an abundance of capacity. So lots of capital investment that comes into the insurance market, allowing insurers to take on more risk. With that too comes underwriting conditions that are loosened. There's more competition, and that obviously works back and affects the rate and the pricing being more competitive. These market cycles are driven by the greater experience of the industry, whether there's profit or loss experience, and also by greater economic pressures such as inflation, interest rates, and investment returns. Bernie spoke to investment returns being very low for insurers. If we look back better part of 40 years ago, the industry enjoyed tremendous interest rate return, but inflation was absolutely nuts. So it was a completely different cycle, but the insurance industry could afford to essentially sell their product at a loss because they were making it up on investments. That's certainly not the case now. So next item, just where we're at currently and the underwriting focus and segment performance. The commercial insurance industry has some areas that have been extremely challenging. These challenging areas are where the industry has experienced unsustainable underwriting loss. A few areas of note have been residential condominiums. Some of you have likely seen some articles that have made it in the national news of 304%, 400% rate increases. Older realty has been challenging. The hospitality sector, mostly restaurants, it's been a very challenging space. And also wood and plastics manufacturing. Those areas have not seen tremendous rate necessarily, but they have struggled to find insurers that are willing to put forward capacity. And we're finding ourselves more often where multiple insurers are insuring one singular rate. In a soft market, we don't see it as commonly. In a hard market, it becomes a much more common occurrence. So in contrast, there's been a notable line of our industry that's had solid performance. So going back 4 or 5 years ago when industry results were very poor and there was a need for the market to start seeking improvement in underwriting, improvement in rate, automobile was a sector, commercial automobile specifically was a sector that actually entered the hard market cycle in a fairly good state. So over the past few years, relatively speaking, commercial auto insurance rates have not seen significant rate increases. There has been some exceptions within the transportation sector sector of note, at least from the portfolio at Aviva. But for the most part, there's been good stability elsewhere. And when it comes specific to the construction sector, from my vantage point, what I've seen certainly for the Ontario marketplace is there has been good stability and rate has been relatively stable. So moving on to my third point that I just want to quickly cover. Most business sectors within the Canadian commercial insurance industry has seen solid capacity. So we haven't seen capacity dry up or as Bernie alluded to, where you have carriers that actually exit the market completely. We haven't really seen that. And the premium increases have been moderate. Again, that's the majority of commercial business in Canada. The construction sector for Canada's large insurers has performed better than the average. So which has kept capacity and premiums relatively stable. There have been some challenges of note, and Bernie spoke to this with regards to frame construction. It's something I see with a fair bit of regularity. Frame construction builds are difficult to get notebook capacity, and the rates of yesteryear, 5 or 6 years ago, they're multiples of what we're seeing at current. Another area that some on the phone might be seeing where it's been maybe a little more challenging to secure cover or the rating has changed notably is with regards to wrap-up liability. So that's a space that the industry as a whole just hasn't had performance numbers that have been sustainable. So we have seen that's an area where less insurers are competing in that space and rates have gone up. A last point here is that beyond larger general and civil construction firms, for individual trade businesses, the market has largely remained stable, which has been a good news story. But again, a few exceptions that I've seen certainly, and again, if you follow the insurance industry media, has been snow clearing and roof contractors. It's just been two trades that have been challenging for insurers. My last and final point, just sort of summarize what or sort of to forecast perhaps, the insurance executives and in our insurance news, there's been varying levels of opinion on what we're going to see in the industry in 2022. But what I can say, and very factually, is that over the past 3, again, arguably 4 years, underwriting premium action and underwriting actions have been notable, and it has improved the performance and the sustainability of underwriting portfolios. So in my 25 years in the industry, I've seen, Bernie alluded to 3 market cycle change, notable cycle changes. I've seen 2, the last one dating back quite a while back in around the September 11th tragedies. At that time, the marketplace just seeked out rate sort of equally amongst all industries. This market cycle has been exceptionally different in that you've had capacity dry up. We didn't see that before. And you've had rate being significant in some segments and relatively moderate in others. So what I foresee happening in 2022 is that things will stabilize across the board. With regards to those more challenging segments like restaurants and condos and realty, as I spoke to earlier, I think there'll be continued challenge, but more moderate from what we've seen in the past few years. And when it comes specifically to the construction industry, I believe there's going to be more eyes from the insurance carriers out there and more desire to grow in that space. So again, rates should level off, and there'll be good, healthy capacity in that space. Any questions from the phone? Perfect. All right. I think I'll pass it over to John.
Thank you, Derrick. First off, I too wish to echo Derrick's comment for both thanking Gifford Carr and NCHCA for allowing Cedric to be a part of today's presentation. It's important to identify a qualified third-party administrator partner who will develop with you uniquely tailored programs for your specific class of business. Your TPA must have an end-to-end claim service and technology-based system that you can integrate with your risk management needs to provide a seamless reporting structure and claim capture service. Understanding the need to centralize the intake and triage approach at the onset of any claim in order to assess, mitigate, and control all losses begins with the process of managing customer service, brand protection, compliance, quality, oversight, cost control, and risk management of any incident. When I talk about mitigate, Derrick talked about unsustainable losses. Well, if you can mitigate your exposure and or transfer your exposure or even look at contributory negligence. These are steps that can assist you at the end of the day when it comes to looking for insurance coverage with your broker. Additionally, having a 24/7 call center capability will facilitate immediate triage, claims handling, and claims setup. Operating in tandem with your team, your TPA partner can assure you of a timely intake and claims handling. This is absolutely critical when you're talking about bodily injury incident, or when Mike was talking about earlier in his presentation, a gas leak. It's to get there to mitigate, to preserve evidence that is critical to limiting your exposure to that particular incident. And when I use the term incident versus claim, I use it to describe anything that your organization may be responsible from $1 up to your deductible, or maybe your SIR or self-retention level that you're responsible for. And that again comes into managing your costs. So as I talk about certain points through the next couple of slides here, you're going to see the symmetry of how each bullet is leaning and depends upon the other piece, whether it's data or technology or collection. Is what you do with it at the end of the day that's going to help the bottom line or the ROI of your organization. Your right TPA partner's attention must be to ensure the protection of the client's brand and integrity is upheld throughout the entire claims process. As your business continues to grow and expand its operations, a successful TPA will also adapt and design best-in-class claim solutions. This begins with selecting the right account management team. Account management is a specialty discipline that a TPA must evolve with each of its clients' needs. An account manager provides you with a single point of contact who is responsible for overall program performance through stewardship reviews, client satisfaction surveys, and other regular consultations. The end-to-end quality is managed by your account manager, who then ensures that its tailored desktop service handlers are following best practices while performing regular audits to ensure that they are demonstrating quality services. We heard earlier in the presentations about due diligence and reasonableness. This is also measured and tracked and assisting you once again in mitigating your exposures or risk to that particular incident. By doing this with your claims handlers, a quality assurance program is measured at the file, colleague, and program level. A documented QA program incorporates the development of an internal audit program. The development and implementation training through a variety of means and coordination of client-driven audits will then follow through on recommendations. This will include the conversions of findings into training or process or changes needed. So it's an evolution, it's the learning and management, reading and understanding your data, the issues that were at hand to ensure that same type issues will not occur in the future. Performance benchmarks is important to develop, to implement, to ensure claims handling services are delivered in quality and timely fashion and adhere to your service expectations. The data-driven, a TPA needs to be able to provide access to electronic claims filed and large host of reports that are available in real time 24/7. Data collection results in risk trend analysis like high frequency, low severity incidents, allowing clients to manage their business. Now, this could be the trip and falls that happened and reported. Are they happening at a specific location? Are they happening during the time of weather? Is the owner of the property supposed to notify you to do certain cleaning at certain times? Those are all part of due diligence, and ensuring that you're adhering to those client instructions will go a long way in your defense for any incident coming back at you. The analytics provided the ability to drill down into these claim specifics. The other piece is trust and payment management. The TPA must offer a safe, secure, and effective treasury function with fully reconciled management information capabilities. Now, this means manage your dollars, whether it's in trust fund from $1, or in some cases with your market, like Aviva, where they provide trust funds or settlement authority. Then The data is reviewed and reconciled at month end to ensure the security of your financial information is not jeopardized. This goal is established by opening regular communication and process efficiency, and will ultimately remain flexible and adaptable to change even after any program is established. It will work with you to provide innovative solutions for you and your clients. For the reason of any program's success has always been through a dedicated team approach and support that is provided to that team through culture, systems, quality, and service. This begins with the creation of a client service instruction document. Kat, can you go to the next slide, please? This begins, as I said, with the creation of a client service instruction document. In essence, it becomes a living document that will adapt based upon the tracked outcomes and measure deliverables over time. It will allow the team to measure customer service, coverage, which can also include identifying the correct and applicable policy or potential hold harmless agreements that are in place, or in some cases having a dedicated team that knows your program, your accounts, will know the coverage and the limits that are offered, whether it's manuscript or standard wording policies. This also helps in the initial investigation, the evaluation of exposures, potential loss transfer exposure. Again, it could be simply because of negligence of other sub-trades, or the fact that there's even in fact a hold harmless agreement in place. Then there's the negotiation and litigation preparation. Bernie said earlier about the litigation costs rising 90%. If you have a handle on your investigation and you're doing your due diligence and tracking and conforming to your service standards, it helps in your defense for any claim that's presented against you. And of course, there's the subrogation opportunities. If a proper investigation is determined that the locates were not correct, as discussed again earlier in the presentation, it's another means of defense. And of course, the expense management. This refers to either vendor management or the use of preferred partnerships going forward. Next slide, Kat, please. Thank you. The resulting insights into program design, benchmarking, identifying trends, developing of claim strategy, loss control, compliance, and performance evaluation help reduce total cost of risk and achieve other program goals. Your TPA must appreciate the needs balance between effective cost management and the expectation of their clients' needs. That again goes back to what I mentioned earlier about having that living document, the client service instructions. As data is tracked, historical information is gathered, and trends are noticed, that can affect how you go forward in dealing with similar situations that you've had either favorable outcomes and maybe in some cases not so favorable because certain steps were not implemented at that time. Developing customized performance measurement plans that focus on resolution, financial accuracy, and brand protection are areas of critical importance to our clients. Cedric believes strongly to the importance of regular stewardship meetings with our clients to review the data and statistical information on a program's result with the goal of continuous improvement and guidance, ensuring your ROI. We're able to provide detailed analysis, including all pertinent and mutually agreed upon key performance metrics, as well as periodic reviews against industry trends. Cedric works in collaboration with its clients to determine the appropriate matrix important and relevant to the program, as well as review the effectiveness as they relate to the overall loss of information. Stewardship meetings and bordereau reports can be established according to our clients' needs. They can also include lunch and learns, educational seminars, white papers. The educational seminars can be with your preferred partners. They're the ones that are out there that you rely on, understanding what they can offer, and more important, the legal updates. Again, what was mentioned by Mike earlier in his presentation, knowing the trends, knowing what's coming down the pike helps you to maintain and again mitigate your exposure going forward. Do we have any questions from the group here today? Okay, then thank you. We'll pass it over here now.
Perfect. Thanks, John. Steve Montcalm here. Thanks for everyone participating today. I was here to speak about the transportation and the safety and compliance component of your fleets. Obviously, number one, CVOR basics. Understanding the CVOR is critical these days because it is basically such a huge part of your company's fleet, and obviously the insurance companies are paying a lot more attention to the CVOR reports. And the second part of our presentation is what does it mean in the market today? The increased importance, today's insurance applications, and basically going through all of your reports on a regular basis, including reviewing them with your insurance provider, and just making sure that all the information is directly on there. So Kat, if we can flip to the next slide, that'd be great. What we've done here is we've just taken a sample CVOR. Obviously, due to privacy, we've blanked out all the relevant information, but basically the CVOR is quite simple. It's a commercial vehicle operator record. It's required for operators of trucks and buses plated in Ontario. These vehicles include trucks with gross weight or registered gross weight over 4,500 kilograms, and or buses with seating capacity of 10 or more passengers. As you can see on this report here that we're sharing with you, it basically monitors your operator safety record and is calculated over a 2-year period. Some of the information that we've highlighted on here is obviously carrier information being at the top. Where we really spend a lot of time looking at stuff is obviously the key takeaways of the CVOR status being that it's registered, the expiry date of the CVOR, more importantly, the overall violation rate, and your carrier safety rating. So as everyone knows, quite a bit more information goes on there. Your fleet size, number of trucks, your kilometers traveled. It's broken down between Ontario and the rest of Canada, and then any US mileage that we'd be showing, commodities transported, if you're doing any dangerous goods, etc. So it's essentially a report card of your fleet put on by the Ministry of Transportation, and it is something that we really pay a lot of attention to with all of our clients, and certainly it's become a much more important key to getting competitive pricing on your fleet. So for those of you that don't know or are not familiar, the MTO's website is a great resource. It's mto.gov.on.ca. There's a huge component just for the CVOR and trucks and buses, a wealth of information. You can list, there's a list of excellent carriers, list of unsatisfactory or /cancel carriers that are no longer in business. You can do carrier searches of any kind, essentially. And basically, what's nice about it, the CVOR level 1, which is essentially these first 2 pages, is public. So anyone can order your company CVOR at any time and pay the $5 online and basically get those first 2 pages and see how your fleet has been performing and see how your fleet is rated. A lot of people don't know this, but essentially your overall violation rate, your safety rating, all that information's on there. So it's really key to keep an eye on this, because maybe you're not aware, but some of your clients, or if you're participating in an RFP or multiple bid situations, sometimes the clients will be ordering them and making the decisions based on what is shown on that report. A CVOR level 2, much more detailed report, and it's for the carrier specific. Anyone can then also go in, order it, but it will get mailed to the carrier's mailing address that they have on file. The reason that the CVOR level 2 is much more confidential is it includes much more specific information regarding the driver infractions, collisions, and vehicle inspections, along with your driver or employee names, vehicle make and models, licensing, etc. The reason the CVOR level 2 is so important is because all that information is obviously contained, but the reason the insurance companies and your insurance providers are now asking for these on a regular basis is because it's to verify the accuracy of the information that's being provided to the insurance. Obviously, drivers are listed. Are those drivers that are involved in some of these incidents, are they listed on your driver's list? distances traveled. If you're reporting that your local company only operating in Ottawa, but yet you've got an inspection showing in Kingston, well, you know, why is that? So it's just basically verifying the accuracy of all the information along with your radius of operation, as well as any unreported accidents to the insurance companies. You know, if it's a small fender bender, occasionally clients will just pay for the damages out of pocket. Well, that usually triggers red flag once they see that, and they'll be asking a few more questions. And lastly, the NTO facility audits and scoring, if applicable. That is also shown on there, which is also key to your safety rating. So the CVOR needs to be ordered annually at a minimum. Our recommendation is we obviously recommend quarterly at a minimum. Reason being that is it's just a great addition to your policies and procedures and your overall risk management of your company, because then you can closely monitor it. You can see if your carrier safety rating has remained satisfactory, or has it slipped down to a conditional, or has it improved to an excellent. It's just really keeping an eye on it, and more importantly, also looking at your overall violation rate just to monitor it as well. And we can help calculate that for you on a regular basis to see what, you know, tickets or accidents or inspections are falling off and stuff like that. But also keeping your correct fleet size as accurate as possible, number of trucks, number of drivers, your annual kilometers being reported. All those items all have an impact on your overall violation rate, and obviously then impact your carrier safety rating. So all this type of stuff is key in keeping it as up to date as possible, and can be easily done. I know working with the Ministry of Transportation at times is frustrating because it's been slowed down with the pandemic and stuff, and same with ordering these CVORs. You used to get them in 10 days, 10 business days in the mail. Now they've changed it to 15, and we're still seeing some occasionally taking much longer than that, unfortunately. But it's all about patience and getting it updated, so that way we know that the information is as accurate as possible. The last part of ordering your CVOR level 2 on a quarterly basis, like we recommend, is the most important, is just a full review by the owner, or the owner and the insurance provider or management team, but a full review of all the inspections, all the accidents, all the violations that are being reported on that level 2, to ensure that the company is aware of each and every incident on their CVOR. They don't have any situations where they have a driver who got a speeding ticket and a triaxle that simply paid the ticket out of pocket and kept it quiet, but however didn't realize it was affecting the company's CVOR. So we still see situations like that on a regular basis, and it's obviously crucial to the company that the CVOR is maintained. So that's the biggest reason why we recommend ordering it quarterly. The cost again is $5. It's certainly worthwhile. Also enables your management team to analyze any potential maintenance or driver trends that may trigger some further discussion. You know, should we be looking at telematics or GPS or retraining of any kind in different areas? It really can really set the tone for what's needed for continuous improvement. So importance of having the right risk management policies and procedures in place. It's just overall, it's crucial to your insurance program. As I mentioned earlier, the insurance companies are paying more and more attention to the CVOR. They're paying more and more attention to your policies and procedures manual. Any information that you can share with them as far as a telematics or a GPS program or something along those lines, even something as small as an annual safety recognition for your safe drivers or a safety bonus, stuff like that needs to be shared with the insurance company, just so that they know that you guys really have a handle on it and you're really making an effort to have the right people in the driver's seat. So having the right people on your team who specialize in transportation and construction and can assist with all the CVOR items, as well as assist in any potential MTO facility audits. I know I've been in the business over 20 some years now, and I've been involved in several of them, and it just helps to set the tone with the ministry representative that's there, saying, you know, they do ask for quite a bit of information on your insurance, your fleet insurance policies, but just simply having your insurance provider sitting there and giving you, assisting you with the audit is invaluable. So it improves, you know, prove your CVOR. If the audit goes well, you can sometimes get bumped from a conditional back to a satisfactory, which is crucial to getting much better pricing. The preparation for the Mto audit, we usually go in the day before. Most of the time they give you advance notice, but if they don't, you're completely allowed to refuse the Mto access to your premises for the audit. You're running a business, it's a professional business, and you're fully in your rights to ask them to schedule an appointment, and you'd gladly take part in the audit, but they can schedule an appointment just like any other appointment, and then that way gives us a chance to be a little bit more prepared. And then also educating your drivers on the appropriate paperwork and the importance of it. Just going through your driver files, your maintenance files. That's usually the two biggest areas where they tend to target. And then obviously with the logbooks and the e-logs and stuff like that, they do spend a lot of time there as well, because that's usually where we see some of the issues. But I'd really like to thank the National Capital Heavy Construction Association for allowing us to participate in today's session. Really enjoyed all of the presentations this morning. And again, big thank you. And just to wrap it up, if anybody's got any questions on any of our components of the presentation today, please feel free to send them now through the group chat, or speak up and or reach out to us afterwards privately. We'd be happy to help. We're local here in Ottawa. So thanks again, Kathy and everyone involved in setting this up. It was great.
I don't see any more questions in the chat, so I'll take a moment to thank all of you for your presentation. We really appreciate the time you took to put it together. That includes today's presentations. Just a reminder that our next education series events will take place on February 22nd. That event is called Industry on the Move. There's going to be a presentation by the City of Ottawa on their new excess soil specs. There's going to be a presentation about working on City of Ottawa projects during the pandemic. There's going to be an update from Ottawa Public Health. There'll be a presentation from the City of Ottawa on social procurement and what that might mean for the industry, and there'll be a presentation on accessibility. March 8th is going to be the city spec update. I'd like to once more recognize our partners, the City of Ottawa and the Association of Consulting Engineering Companies of Ontario. Ottawa chapter, we'd like to thank our sponsors, our gold sponsor Forterra, our bronze sponsor Acon Construction, and our corporate sponsors JD Brule and Clean Water Works. If there's no more questions, thank you all for coming, and a special thank you to our presenters. Please enjoy the rest of your day.